Welcome back. Let's see what's happening at Nigeria's forex markets with an FX dealer at Rand Merchant Bank, Ayodeji Oyeni. Thanks for your time, Ayodeji. So how has the Naira performed this week at the FX market?
Thanks for having me. We've seen a lot of improvement in the liquidity in the FX market this week. So turnover week to date has been about $470 million. Most of these transactions have been executed between the 360 and 369 levels, and that constitutes about 90% of the transactions executed week to date. And also, in terms of flows, the flows I talked about was just as at Thursday. So we'll probably see more transactions being done around the 360 to 365 levels. And this is coming largely from offshore interest. Most of them are interested in buying the treasury bills around the 1 year region, which yields about 22.5 at the moment. So that's the bulk of the flows we've seen. And we've also seen some pockets of flows into the equity space.
Are we likely to see some more interventions from the central bank next week?
We'll always have the intervention from the central bank, either in form of the wholesale or retail. The recent pattern we've seen is for the wholesale intervention, it's been on a weekly basis, while the retail is more of fortnightly. So we'll still expect that to continue. But the bulk of the activities we track is in the investors and exporters window, and that's where we've seen some traction, especially from the offshore players.
What direction are we going to see the Naira next week?
Yeah, we still expect the Naira to trade between the 360 and 365 mark for next week, and that's because this 360 mark has sort of been the new support level. But most importantly, we expect liquidity to improve, so we'll see more transactions being executed in the market for next week within that range.
FX dealer at Rand Merchant Bank, Ayodeji Oyeni, thanks for speaking with us. In other stories now, Moody's Investors Service is scheduled to release a ratings review for South Africa 2 months after it cut the local and foreign currency assessments to one level above junk. Analysts believe the country could escape a further slide to junk status. Moody's put South Africa on review for a downgrade following a cabinet reshuffle in which President Jacob Zuma fired Pravin Gordhan as finance minister, prompting S&P Global Ratings and Fitch Ratings to cut the nation to sub-investment grade. Policy uncertainty and political turmoil increased in the last 2 months as the nation's anti-graft boss instructed changes to the central bank's mandate. South Africa entered a recession in the first quarter. In the meantime, South Africa's manufacturing output fell 2.3% year-on-year in June after contracting by a revised 0.9% in May. Economists have forecast manufacturing volumes would contract by 2.5% year-on-year in June. Data from Statistics South Africa shows that factory production on a month-on-month basis was unchanged at 0%. Well, and that was up 1.5% in the 3 months to June compared with the previous 3 months. An Anglo-South African financial services group, Old Mutual PLC, has declared an increase in first-half profits after it reduced debt and sold shares in its U.S. asset management unit. Pre-tax adjusted operating profit rose 37%, and net income climbed to £531 million from £284 million a year earlier. The London-based insurer's diluted basic earnings per ordinary share increased to 10.8 pence from 5.6 pence, and the interim dividend advanced 32% to 3.53 pence. The insurer, which started in South Africa more than 150 years ago, plans to split its business into 4 units by the end of next year to help boost value for investors. The insurer's focus is now preparing on its emerging markets and wealth units to be stand-alone businesses while preparing for initial public offerings after a full-year profit is reported in 2018. In the meantime, the African Export-Import Bank is opening its shareholding to the investing public through the issuance of depository receipts. The deal being arranged by Mauritius-based firm SBN Group will see AFREXIM Bank launch a $300 million equity offering and that's using the depository receipts backed by Class D shares. The depository receipts, whose listing has been approved on the Mauritius Stock Exchange, is subject to fundraising by the end of September. AFREXIM Bank explains the rationale for issuing the depository receipts is hinged on the need to enhance its capitalization in order to narrow the trade financing gap in Africa, currently estimated at $120 billion. The issue represents the first national bank depository receipts through an African stock exchange. Over now to Uganda, where the central bank has left its key lending rate unchanged at 10%, saying economic activity is picking up. The Bank of Uganda Governor Emmanuel Mutebele insists the economy has gathered momentum in the first half of 2017 and would grow at 5 to 5.5% in 2017 and 2018. He told journalists at a conference that inflation is expected to remain around the medium-term target and that economic activity is picking up with output approaching potential. Tanzania-based Swala Oil and Gas is planning a bond offer to local investors in the country. The first oil and gas company listed on an East African stock exchange with significant local ownership says the local tranche of 7-year retail bonds will have a coupon of 12 to 16%, and that's payable in either available funds or Swala shares at a 12.5% discount. The issue is designed to maximize Tanzanian ownership through the conversion into Swala shares and revenue from the bond coupons. Swala's board of directors has authorized the creation of 50 million preferred shares each, with a face value of $1, 20 million of which will be issued to the vendor as part of the transaction, and the other 30 million of which shall be available to Swala's current shareholders in exercise of their statutory preemption rights. And that's our program today. Thank you for watching. I am BC Adebayo.